Hey everybody, Smart Silver Stacker here. Hope you're doing well. So this last week was a wild one in the precious metals. Silver just hit its highest price level in 13 years. Platinum just broke out of a multi-year downtrend. And for the first time in a while, the miners are actually leading the charge. Now, gold is an interesting one here because gold is coiled like a spring at a key support level. And the macro backdrop, well, let's just say that it is getting very volatile. Let me show you what just happened and what is likely coming next.
All right, so let's take a look at some charts because there are some very significant technical developments in the precious metals that we need to be aware of and need to be paying attention to right now. So starting with this weekly chart of silver, you can see we've got this ascending triangle pattern, which dates back to the COVID lows. So this has been in effect for 5 years. This is a very bullish chart formation. You've got higher highs and higher lows, and the trend lines are converging. So at some point we would expect a breakout to the upside out of this pattern. And if we switch to a daily view and zoom in a bit here, you can see just how bullish this silver chart is. We may be on the cusp of a breakout from that pattern. Now, going back to the end of March, we had this high where silver touched above 34 bucks, then a big collapse following the Liberation Day tariff announcements. Then silver rebounded following the suspension of those reciprocal tariffs. It bounced around, traded sideways, broke out of this pattern on May 20th, consolidated a bit more, and then Monday of this week was really the big breakout. Silver had a day when the spot price was up 5.4%. That's a big single day move. We had a few more days of consolidation, and then this was very significant. On Thursday, the silver price hit the highest level in 13 years. It actually rose above 35 and then above $36 on Thursday. Silver hit 36.06. That was the high of the day. And then you'll notice it closed just below this blue trend line. That is the top trend line of that ascending triangle pattern that we were just looking at. So then on Friday, we actually had a continuation of that rally. Silver did not drop from that line, which represents significant resistance. Instead, it rallied and it rose above that. On Friday, silver traded as high as 36.33. It pulled back and closed the day just under $36. So this is a key inflection point for silver, because if you look at the longer term chart, if we're breaking out of this ascending triangle, there's not going to be a lot of resistance up until the all-time high of $50 that we hit back in 2011. And if you go back even further, we touched that in 1980 as well. So we may see a rapid ascent to the $50 level over the course of the remainder of the year if silver manages to continue its upward trajectory. Now, moving on to platinum, this is also an incredibly interesting chart because platinum has just broken out of its own consolidation pattern, a downtrend that had been ongoing for years, and it broke out on significant volume. This is a weekly chart. Look at the spikes. So this week here, this candle, let me zoom in a little bit. You can see we had this breakout above the trend line on a big spike up in volume. Then we actually retested it the next week. So we had a retest of that level and then a very significant rally. This week, the platinum price closed up just under 11% for 1 week. That is a big move, and it did it on strong volume. So things are looking good for platinum, and this is a very bullish development, I think, for the whole precious metals complex here. Now that brings us to gold. So gold has been a little bit muted compared to the other metals, but if we switch to a daily chart, I think that gold is setting up for a big move here too, because we had another consolidation dating back to mid-April in gold. You can see it was trading within this range. And then on Monday, that big day when we had the breakout in silver, we also had a big move up in gold that broke out of this pattern. The gold price was up almost 3% on that day. Now, the rest of the week, gold was a little bit subdued, but you'll notice that it has come right back down to this trend line. So we may be setting up for a retest and a strong rally. Could take us to new all-time highs above $3,500. I mean, just look what happened with platinum. If you look at the daily chart, it broke out of its consolidation, retested the line, and then had a huge run up. So we may be setting up for a similar move in gold here. And what was perhaps even more significant than what we saw in the precious metals was what we saw in the miners. So this is a weekly chart of the GDX, which ended the week up 1.92%. Now that doesn't seem like a big move, but again, switching to gold here, you can see gold was up only 0.63% on the week. So the fact that the senior gold miners in the GDX ETF outperformed gold is significant, because thus far that is not the trend we have seen. We have seen the miners lag the metals. Now if we look at the GDXJ, the junior gold miners, they were up 5.63%. So that's a big deal too, because again, gold was basically flat on the week, but the miners leading the charge here. And if we look at the silver miners, look at the volume spike here. This is the weekly chart of the SIL Global X Silver Miners ETF. These were up 12% on the week. So silver had a good week, but the miners even better. And then finally, look at the SILJ Junior Silver ETF, up over 14%, also on significant volume. So you've got platinum breaking out, silver breaking out, gold looks like it's coiled and ready to launch off of that trend line, and the miners are all up on significant volume. So this tells me that things have changed and we are headed for a new paradigm, the next phase of this precious metals bull market. Also interesting to note that the gold to silver ratio has come way off of its highs. Remember, it was up around 105 recently, down to 91.83. Now, I suspect that this number is likely going to continue to drop. We will see gold heading higher, but I think silver is going to continue to outperform. That's typically what we see in the second phase of these bull markets. Let's talk about some of the fundamental factors that are underpinning some of these moves. So we had kind of a mixed week in jobs data. Earlier in the week, we got the ADP jobs data, which was the lowest in more than 2 years. But then on Friday, we got the non-farm payroll data up 139,000. Now that's still the lowest number since February, but it beat market expectations of 130,000. So kind of mixed signals from the job market. And I think that this data on Friday is why we didn't see a bigger rally in the metals, because this suggests that the Fed may have a little room here to continue to wait and see. They're not going to be launching an intervention or easing monetary policy right away. At least this non-farm payroll data isn't going to force their hand. However, one thing that might is pressure from the executive branch. So on Friday, despite that, relatively strong jobs report, and personally, I don't really put a lot of stake in the jobs reports. I think those numbers are cooked anyway, but the Fed watches them, so that's why they're important. But despite that, we had President Trump now calling for the Federal Reserve FOMC to cut interest rates by a full percentage point. Now, that would be a lot more aggressive than what the Fed has done in recent years. Typically, if they cut, it's by 25 basis points. But you've got the president now calling for a full 100 basis point rate cut. Doesn't mean we're going to get it, but this pressure is going to continue to be ramped up from the Oval Office on the Fed. And at the end of the day, the reason that the Fed is going to have to ease monetary policy, and I think they're going to have to do a lot more than just cut rates, I think they're going to have to return to QE, is because of the exploding U.S. national debt. And this also is a major contributing factor to rising metals prices. The U.S. national debt now approaching $37 trillion. And if the big, beautiful budget bill, makes it through the Senate, the CBO tells us that that's going to contribute between now and 2034 to an additional $3 trillion in deficit spending. It's probably going to be a lot worse than that. The CBO likes to look at things through rose-colored glasses, but this is the reason, in part, why the metals are rising the way that they are, because it's becoming more and more obvious to investors and institutions and central banks around the world that the dollar is losing its value. Therefore, safe haven assets and inflation hedges like the metals are being bid up. In addition to the looming debt crisis and the fact that we can't seem to get our fiscal house in order, geopolitical tensions are rising significantly right now. For anyone who had held out hope that Russia and Ukraine would reach a peaceful resolution sometime soon to their ongoing conflict, doesn't seem like that's going to happen. We had the surprise attack from drones that were smuggled into Russia by Ukraine, likely with Western intelligence. Russia has been launching wave after wave of counterattack on Ukrainian sites at this point. The geopolitical tensions are soaring, and what do you expect? You use Western intelligence to attack a superpower's nuclear triad. Of course, that's going to escalate things. And bottom line here is that geopolitical tensions are rising, and therefore the demand for safe haven assets is also on the rise. So a confluence of factors here driving the metals higher.
So with the metals heating up, the miners finally showing strength, and the macro backdrop loaded with both opportunity and risk, it's the perfect time to keep an eye on companies that are leveraged to gold and silver. That brings us to today's sponsor, Goldmining Inc., ticker GLDG. Today's sponsor, Goldmining Inc., ticker GLDG, is trading within a few cents of its 5-year lows, set during the March 2020 global panic. Again, the market cap of the company today is approximately the same as it was in March 2020 when the global economy was in full disarray. Gold's price was less than $1,500 per ounce, and people were glued to the TV screens scratching their heads. Today, gold's price has more than doubled, yet GLDG's share price has barely moved at all. This is the reason that I am showing this to you right now. As of June 5th, Goldmining Inc.'s market cap is approximately $154 million with no debt and $144 million in cash and equity holdings based on cash balances on February 28, 2025 and closing prices on June 5th. Goldmining Inc. owns approximately 79% of U.S. gold mining, NASDAQ ticker USGO, and just over 12% of Gold Royalty, New York Stock Exchange ticker GROY. 9.9 million shares of USGO are quoted at $94 million. 21.5 million shares of GROY are quoted at $44 million. Cash and equivalents is $7 million. So the total is $144 million. When Goldmining Inc., trading on the New York Stock Exchange under the ticker GLDG, originally acquired their dozen or so gold projects, the peak combined market caps of the companies that held them was approximately 850 million Canadian dollars, which during the period 2010 to 2012 was much closer to par with the US dollar than today. The combined peak market cap was calculated based on each respective company's peak share price during the period prior to acquisition. Peak market caps of companies acquired, 850 million Canadian dollars in 2010 to 2012. Current market cap of Goldmining Inc., $154 million in 2025. Gold spot price, $1,925 in 2011, $3,300 in 2025. Remember, Goldmining Inc. owns approximately 79.3% of U.S. gold mining USGO and 12.6% of Gold Royalty Corp GROY. So you're instantly getting exposure indirectly to 2 additional gold companies. Goldmining Inc. is trading for 78 cents US right now, which is near its 5-year lows. Look at the key shareholders of Goldmining Inc. Ruffer, BlackRock, Sprott, Morgan Stanley, GDXJ ETF, UBS, and Goldman Sachs. Management and insiders have real skin in the game, collectively owning over 10 million shares, or approximately 5.15% of the company as of May 12, 2025. Once I account for Goldmining's cash and publicly traded stock portfolio, the company's dozen gold properties aggregating 12.4 million ounces of gold equivalent estimated mineral resources in the measured and indicated category and an additional 9.1 million ounces of gold equivalent estimated mineral resources in the inferred category are value priced in the backdrop of record gold prices. Just don't act like you didn't know afterward. Goldmining Inc. owns a dozen projects containing an aggregate of 12.4 million ounces of gold equivalent estimated mineral resources in the measured and indicated category and an additional 9.1 million ounces of gold equivalent estimated mineral resources in the inferred category. Gold is trading near all-time highs while Goldmining Inc. is near its COVID-19 lows. Goldmining Inc. is down approximately 70% from its 5-year high. Goldmining Inc. holds one of the largest portfolios of gold resources among junior explorers in the Americas, and it's steadily advancing those assets. In a rising gold environment, this portfolio of assets can offer leverage to the gold price. Are you positioned in this market? We're still in the first inning of this gold bull market, and there's still time to get aboard. I urge you to check out Goldmining Inc. now. Do your own research. There's a link down in the description. So look, this week is shaping up to be potentially extremely eventful in the precious metals markets. A confluence of factors is supporting hard assets, real money, inflation hedges, safe havens, you name it. Gold, silver, and even platinum prices appear to be benefiting. The technical picture for the metals is also incredibly bullish right now, so buckle up. It's very difficult to time a market breakout, but the stage does appear to be set for the metals, and when they do break out, they can move very fast. Let me know what you think in the comments down below. Thanks for watching, everyone. If you made it this far, please like, comment, and subscribe, and I will catch you next time. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.